Hello and a very good morning. Wishing you all happy UAE National Day to all of you. Today we are going to discuss one of the crucial topics in financial services, that is customer risk assessment, as the slide shows on the screen. And to throw light on the subject, we have seasoned AML expert with us today. I'm thrilled to introduce you to an exceptional professional in the world of AML compliance and corporate governance, presenting you with Ms. Dipali Vora, a distinguished qualified company secretary. With an impressive track record in the field, Dipali brings a wealth of experience and knowledge that truly sets her apart. She has delivered over 1,000 plus hours of training on AML compliance. Her passion for education and her ability to translate the complex regulatory requirements into practical insights make her training sessions not just informative, but yes, more engaging and empowering. So, yes, without further ado, let's welcome her to this virtual stage. Dipali, the floor is all yours.
Thank you so much for the introduction, Jyoti. So let's first discuss. First of all, very good morning to everybody. So today we will be discussing what AML regulations are. A very brief introduction on that, and then we'll be jumping to the topic that is customer risk assessment, and we'll be getting some more insights with respect to that topic. How are we supposed to comply with that? What are the things that we can do, and comply with the rules and regulations? So let's first look at what are the rules and regulations which are in place in United Arab Emirates with respect to anti-money laundering compliance. So basically, there are two major laws, that is Federal Decree Law number 2018 on anti-money laundering and combating of financing of terrorism. And this is basically a law which tells you that, okay, this is something that you're supposed to do. But how are you going to comply with that? That comes from Cabinet Decision number 10 of 2019. This particular regulation is also regarded as the implementation regulation. Apart from that, we have Cabinet Resolution number 74, which talks about, the requirement of screening, basically, that you're not supposed to deal with a sanctioned individual. That all comes from Cabinet Resolution number 74. So these are the basic rules and regulations which are applicable to every financial institutions, DNFPBs and VAS. Apart from that, there are certain rules and regulations which are issued by specific supervisory authorities. For example, the companies which are formed under ADGM, they are required to comply with the AMLCFT rule book, which is issued by their own supervisory authority, in addition to Federal Decree Law, Cabinet Decision, and Cabinet Resolution number 74. So they have this specific rules and regulations issued by central bank, plus the rules and regulations which are issued by their own supervisory authorities. Same way, we have AML-CFT rulebook, which is issued by DIFC for those entities which are placed and working in DIFC. That is, they come under Dubai Financial Services Authority. Apart from that, there are several other guidelines which are regularly being issued by various authorities like central bank, Ministry of Economy, Ministry of Justice, Virtual Asset Regulatory Authority, in order to guide people that, okay, how are you supposed to follow, as in when there are some amendments, new guidelines are being issued, just because we get some more material to understand the law much better, and most importantly, we follow and imply that in our organization. Then this is the basic, the framework which is there, which all of the DNFPBs are required to apply. First and foremost, GoML registration. That is mandatory. Apart from that, when you are doing GoML registration, at the same time, you are also required to appoint a compliance officer. Now, the next very important part is AML enterprise-wide risk assessment. So this basically tells you that all companies which are operating, like all DNFPBs which are operating in UAE, they are required to adopt a risk-based approach. Risk-based approach means wherever there is more risk, you apply more control. And by applying this underlying principle, you understand your own company risk, and you bring out and you basically mention some mitigation measures to deal with those risks. So at third stage, you understand your own company, you understand the products and services that you are providing, and what are the risks associated with them. And there are certain factors which are considered when you perform enterprise-wide risk assessment, like geography, customers that you deal with, what nationalities they are coming from, what are the transactions, how are you concluding the transactions, how are you onboarding the customers. So that all the analysis, quantitative and qualitative analysis happens at the third stage. After doing this, you will be in a position that you know your organization much better, and then you will be able to draft your own company policies. That is AMLCFT policy, procedures and controls. Now this is purely documentation. Now the actual part comes is the putting this particular documentation into place. That is performing KYCs, screening all of your customers. Whenever there are matches, what particular forms you need to file, what are the actions you need to take when you screen them, depending upon the matches that you find. In case if you don't find a match, that's a very good thing. No adverse media, no sanctions, no name in sanctions. So that's the best thing actually when you screen a person and you don't get a match. So basically, it's you do KYC, you do screening, and then next part, that is risk profiling. That is risk profiling is basically main part that we're going to discuss today. That is customer risk assessment. Why do we do customer risk assessment? On what factors do we do it? And what are the various categories and baskets? How we bifurcate our customers? That is low, medium, and high. And in what cases, what kind of due diligence we are going to apply, that we are going to discuss it at a brief, I mean, in a more detailed manner actually. And then after completing this particular exercise of bifurcating the customers, you continue the business. In case in this entire process of you collecting the documents, providing the services, in case if you come across any suspicious behavior or you observe any red flag, then you have the provision of filing suspicious activity report or suspicious transaction report. These two reports are available once you log into your GoML portal. Then there's this provision which talks about record keeping. Record keeping is basically where you are required to maintain certain documents for a certain period of time. So for the mainland companies, free zone companies, it's 5 years, but for the ADGM companies, it is 6 years, and DIFC company as well. Then for ongoing monitoring, you are required to just make sure that all of the customers that you are dealing with, their risk assessment is correct as per their existing the existing what like for a company, when you the documents which are there with you, the UBOs documents which are there with you, you have to make sure that they are updated with their current profile. Like for example, you have a customer and there is an adverse media and you come to know, you research more, so accordingly the risk assessment should also be updated. So that's basically ongoing monitoring. You have to make sure that everything is up to date for your customers. Apart from that, there are some other compliance requirements also. That is, you're required to have your AML. You have to appoint an AML auditor who will verify your entire AML structure. The requirement of filing various other forms like DPMSR report, REAR report, conducting annual AMLCFT risk assessment, periodic reports, which are to be submitted to the senior management. Then there are certain other forms also like HRC, HRCA. That is also a requirement in case if you're associating with North Korea, Iran, or Myanmar. Then mandatory AML training for the compliance officers, senior management, and the staff on a regular basis. It's not a one-time thing. You have to make sure that they are being, told about the rules and regulations at a length, like, every 3 months, they're informed that, okay, this is something that you need to do on a regular basis with respect to all of the customers. Then let's understand what are the different types of customer due diligence measures. So basically, there are three types of due diligence measures. That is simplified due diligence, standard due diligence, and enhanced due diligence. Now, on the basis of the risk categorization that we do for our customers, we'll appropriately apply the CDD measures. Like for example, if a particular customer is listed on a recognized stock exchange, the law gives you an exemption to do, the customer due diligence, the entire lengthy process. So in that case, what you can do is just identify the person, UBO, and do the screening and close the file. So this is basically for those where there is low risk. Now, when I say company is listed on a recognized stock exchange, now when you give this type of exemption, you also have to understand that that listed company is a compliant listed company. So accordingly, you can take the call. Then comes standard due diligence. Standard due diligence is where whatever measures we have applied for simplified due diligence, in addition to that, we are also going to understand the address. We are going to obtain the address proof. We are going to obtain the details around the occupational and employment details. We will understand that that particular customer or that particular like the corporate or B10 individual, in what industry they are working, what is their business, and for what reason they are coming to us for that particular, like for what are the services that they're expecting from us. Then comes enhanced due diligence. Enhanced due diligence is done for those customers where the risk profile is high. So in addition to standard due diligence, what measures we will apply? So we will ask for source of funds, source of wealth. We will also, we'll have to take the permission of the senior management before we onboard them. So that is something that is very important, that whenever we are onboarding a particular customers whose risk profile is high, we need senior management's approval. Then the next is first payment from their customer's own bank account. So in the like in enhanced due diligence, we have to make sure that the first payment is coming from that particular customer's bank account. Now coming to the ongoing monitoring part, like for low risk, we can have a less frequent. We will monitor them on a very maybe once in a year, or maybe once in 1.5 years. That is something that we can set and mention in our policy. Standard due diligence, that is regular monitoring. Maybe we can have we can just set a time period that for all the customers who are belonging to the medium range, we are going to apply, like we are going to we will be actually doing it maybe once in 6 months, or in high risk category customers we'll be doing it more frequently, like maybe once in 3 months. That is something that we need to set a period. Now this is that we mentioned in the policy, but apart from that, there are certain other trigger points also, like maybe if there is any change in the profile, we need to update that particular part, we need to update them. Standard due diligence would be most probably, like example for applying standard due diligence and considering a particular customer as as a medium risk would be like if there is a limited liability LLP which is operating in United Arab Emirates. In case of high risk, like in what cases we can consider a customer as high risk? Like for example, if we are dealing with a person who is a politically exposed person, or if there is any person who is associated with them. So that is where we can apply high risk, where we can apply, enhanced due diligence measures. Now, what exactly is customer risk assessment? This is something that we're going to understand. Customer risk assessment is basically a very important part in the customer onboarding process. Because when we are analyzing a particular customer's risk, we are going to understand that particular customer's profile, whether there is any associated risk with that person that could also be risky for our organization. If there is a person who has some, say for example, a history of a financial crime, criminal, there are some criminal cases pending against them, so of course that is going to affect us as an organization also. So it's very important, and customer risk assessment is an important part of the entire customer onboarding process. At this stage, we are going to categorize our customers into 3 baskets. Like either a customer is a low risk, either that customer is medium risk, or either that customer is high risk. And because we are categorizing those customers, we are analyzing the risk profile, we are actually putting risk-based approach into place. By adopting this method, by bifurcating the customers into 3 baskets. Now, the next question that we are going to understand is, why is customer risk assessment important? Customer risk assessment is a very important part, because in this process, we are going to create a profile for each of the customer. We are going to determine that which method of due diligence we are going to apply. Like for example, if it's a low risk customer, we will apply simplified due diligence or standard due diligence. In case of medium risk customers, we will apply standard due diligence. In case of high risk customers, we will apply enhanced due diligence. So that once the profile is created, we will then be in a position to ascertain that what kind of due diligence measures we will apply to them. In case, as a part of this risk assessment process, we are also required to monitor the transactions that we are doing with them. For example, I'll give whether the customer activities match the risk profile or not. Like this is just an example. Today I onboarded a customer. Okay, he or she was a low risk customer for me. But later on, after 6 months, 8 months down the line, if there are some adverse media coming up, if there are some articles which are suggesting that there is some criminal involvement in some of maybe human trafficking or financial crime, so we have to make sure that we are evaluating that, and at the same time the risk assessment which we have in our records is matching with that particular customer's profile. So that we'll only be able to do if we are monitoring the transactions that we are having with them, we are monitoring their profile, we are monitoring the documents that we have. So that is something that is very important that we need to do. Also, if there are any changes, like as I said, if there are any changes in the profile of that particular customer, maybe the name is changed, maybe the address is changed, or maybe the UBOs which are associated with the company, they are involved in some criminal activity. So all of these factors are to be considered in order to make sure that the risk assessment that we are doing is always in line with the profile of that particular customer. And the main reason that why we do that is to just make sure that nobody, not even an organization or not even an individual, is taking undue advantage of our company, or they are, using our services to commit any criminal activity. That is something like that is the main reason why we are doing this, just to make sure that we are not helping anybody commit a crime, we are not supporting anybody who is into this. That is the main reason that why we do customer risk assessment. Now we've already understood why, what, etc. Now how do we actually put that into practice? What are the various ways to be that can be done in order to do customer risk assessment? That also we will understand. So a particular customer's risk is, can be evaluated in various ways. Like a particular customer's risk is based on that particular customer's profile, from what nationality they are coming, what kind of transactions they are doing, what is, how are we onboarding that particular customer. So basically, all of these factors will contribute to that particular customer's risk. And accordingly, we will be assigning a risk to them and bifurcating them into low, medium, or high. So let's look at the customer risk, customer specific risk, which are associated with with our proposed customers. So if you see this colors which are being shown on the screen, the green represents low risk. As in when the color is changing and going upwards, that means it's becoming more and more risky. So if a particular if a particular customer is cooperative, that particular customer is resident in United Arab Emirates, that particular customer is an individual and not a corporate. So the risk categorization here is low for them. If a particular customer is not a politically exposed person, so that is also in the range of being low to medium. Then comes there is no adverse media associated with that particular customer. That particular customer is non-resident. So when this particular customer from resident to non-resident it is going, the risk category is going from low to medium. If any of your customer is high net worth individual, if they have a complex business structure. So here complex business structure means there is, you're dealing with a corporate. So the risk is now changing into medium. Here when the person was an individual, it was low, but when it's transferring from individual to complex business structure, now it is going from low to medium risk. If the customer is DNFPB, like DNFPBs include, dealers in precious metals and stones, TCSPs, accountants and auditors, real estate agents, then lawyers and notaries. or virtual asset service providers. So if they are belonging to this category, now it is going from medium to high range. It's coming in between that. Apart from that, if the customer is evasive and non-cooperative, he's not, cooperating with you in sharing the documents, or, you have to follow up with them a lot. So that is also, going towards high risk. If there is criminal history with respect to a particular customer that you're about to onboard, if they're associated with a PEP, or they themselves are PEP. So this is high risk. You have to treat politically exposed person as high risk. And the last is sanction. So if a particular customer is sanctioned in UNSC consolidated list, UAE local terrorist list, or any other sanction list, okay, then accordingly actions should be taken and reporting should be done. So that is like, sanction would be actually reject for you. But that completely depends upon whether you are providing services to just local clients or foreign clients. Accordingly, you will have to make sure that you're following country specific sanction list also. Coming to PEP, criminal history and associated with PEP. That also depends upon your company's, risk appetite. If you yourself as a company have decided that, we are not going to deal with this kind of customers, or we are not going to deal with corporates, or we are not going to deal with individuals. So that is something that you have set for yourself. So that customization can also be done. But the law says that you cannot work with a sanctioned person whose name is appearing in the sanction list, that is UNSC consolidated list and UAE local terrorist list. The next risk category is transaction specific risk. Transaction specific risk means how the customer is making the payment to you, like whether they are doing it from their own account, whether they are paying through the check or bank transfer. If there's the transaction value is also normal, it's not way beyond the services or as per the market range which is going on. Transaction does matches with the economic profile. Economic profile as in, the person who's coming to you, they can actually afford that transaction which you can make out. So that is, in the range of low risk. When also no agents are involved, that is still coming from medium, low to medium range. As in when, more such, parameters are added, like if it's a cross border transactions, then that will be medium risk for you. Then when agents are involved, when third parties are involved in a transaction, that is also, because when third party is involved, you are also required to assess the risk. You are also required to do KYC for those parties also which are involved in a transaction. Okay, there are a lot of transactions happening, very frequently transactions are happening, and the value of the transaction is also quite high. Then that is something to be considered. If the payment is done in cash, so that is also something which is risky for you. So now many companies in UAE have completely resorted to, accepting only through bank transfer. But there are certain businesses who are accepting cash payment also. So this cash payment is also something risky. We should have a cap or, a cash acceptance policy in the company that only this much cash, no beyond that. So that when you accept cash, that is also more risky. Then if the payment is coming from third party as in if I'm coming to you for some services, but the payment is done from some other party. So that is of course risky for you. If that was not communicated to you, earlier when they had come for, taking the services. So that is also a risky thing. If transactions which I'm doing are not matching my economic profile, because I cannot afford that transaction and still I'm doing that, that means there is somebody who is backing me up and I'm not disclosing that. That is also that angle is also to be thought about when, risk assessment is done. And the last is payment by virtual assets. So accepting payments through virtual assets is considered as high risk, but that is also completely subject to business. Not every company has, the method to adopt, accept the payments of virtual assets. And also this depends on the company's risk, risk appetite, like how they want to treat these transactions. There are companies who might say that we will not deal with those customers who want to make the payment in virtual assets. So that is something customization can be done. But ideally, if the payment is coming through cash or virtual assets or from third party, it is risky. Then the next part is customers jurisdiction related risk. That is from where are they coming from? If the customer is coming from a country or he is not subject to any sanctions, So that is low risk for you. If they're coming from a country where there are proper rules and regulations with respect to money laundering and financing of terrorism, they have a proper mechanism in their country. So of course that is also low risk for you. If there are stringent money laundering and financing of terrorism risk, so even that is low risk for you, or low to medium risk. As in when the risk factors, I mean, increases, the risk of your customer will go from low to medium to high. So if they are coming or hailing from a country where there is complete transparency with respect to financial reporting, that is of course low risk for you. Then country with strong business laws, they come under proper jurisdiction. They are actually coming, they are properly registered, they have strict rules and regulations, disclosure rules and regulations. So that is, there is complete transparency around the business also, what are the ultimate beneficial owners. So this is something which is very good, and this could be considered as low risk. If they hail from a country where there are no proper financial reporting requirements, like they are not required to submit yearly accounts, or audit is not mandatory. So of course this is something which could be medium risk for you. If the country does not have, they have weak money laundering and financing of terrorism, or they belong from tax haven countries, or if there are actually certain countries whose names are not there in gray list, but they are very very known for corruption and money laundering involved in that particular country. So that is also something to be considered, and accordingly risk assessment should be done. If the customer is belonging from jurisdictions under increased monitoring, which is also called as gray list, which is issued by FATF, so even that is to be considered as high risk. And the last is blacklisted countries. So currently there are 3 countries which are blacklisted: North Korea, Iran, and Myanmar. If the customers are hailing from this particular countries, then you are required to treat them. Ideally, you should not associate with them. But in case if you want to, there are certain reporting requirements also which are there in case if you associate with them. But risk assessment should be done accordingly, and they should be treated as high risk. The next category is product or service specific risk. So here is what kind of products, services we are offering, as well as what services they are taking from us. What is the transaction value? That is something which comes under product and service specific risk. Like if they are in, if it's into routine goods and services, is like normal course of business, then that is low risk for you. If if there is no transparency around ownership, if there is difficult movement is not there, difficult movement is there, that is something which comes under medium and low risk. Then if the product and serve, like if there are weak documentation, unregulated industry, then that is medium risk. If the products are luxurious items, that is also medium risk. If easily the ownership can be transferred, that is also medium risk. If the products and services are small volume and high value, small volume and high value, the example here could be dealing in precious metals and stones like diamonds. Small volume, but the value is extremely high. So the risk associated with this particular industry is high. If the customers are into dual use goods means those goods and services which are have like residential use as well as sorry, dual use goods are those where the goods have two uses, that is military use and residential use. So now this includes goods as well as services as well as technologies. If they are into this, then even that is more risky. The example of dual use goods will be batteries which are in the refrigerators. They have military use is, bombs can be manufactured from there. At the same time, they are used in the refrigerators also. Now coming to technologies, the GPS technology that has military use also, and people use it for for other things which are not beneficial. So that is also very risky. And if the last is connected with money laundering and financing of terrorism typologies. So typologies means where there are more chances of money laundering to happen. Okay. That if they are belonging to that particular sector, like real estate sector, so that has a lot of money laundering happening there. As per United like UAE's national risk assessment, they have informed that there are certain sectors which are high risk, which includes real estate sector. So accordingly, risk categorization should be done. The next factor which will contribute to the risk assessment of the customer would be delivery channel related risk. Delivery channel means how are we onboarding the customer, how are we providing the services to them. So here is, if we are personally interacting with them, we know them personally, so the risk category would be low because we know them personally, we have met them, we know the person who we are dealing with, and there are no agents involved. If we are directly dealing with, there is no third party involved, so that means they belong to a low risk category. Also, if the payment is coming from their own account, which is like the main the main underlying reason, that why we expect that the payment is coming from their own bank account, is reason that the bank is also doing some kind of due diligence for their customers. So it is expected that bank has given an account which is not freezed, which is easily operating, so that means they have a good profile. So if they are making the payment from their own account, then that is also one of the low risk category. If you are onboarding a particular customer on non face to face basis, like you have not met that person, you are completely dealing with them purely on your email communications, so that is also something which is considered as medium risk, because you don't know them, you've not seen them. If the payment is coming from a third party, if a completely unrelated third party is making the payment without informing you, or it's like, that is one of the reason that you can consider for treating a particular customer as high risk. If there are intermediaries involved, intermediaries as in, like, you are not delivering your product or services directly to that particular customer, but there are certain persons in between that you're dealing with, so that is considered as high risk. And the last is, if you have not met that person at all, not even a Zoom meeting, nothing you have done, so that is to be considered as high risk. Now, this is what we have so far understood, that what are different types of due diligence methods, like simplified, standard, enhanced, in what type of risk categorization, what type of due diligence we will apply, and what are the factors to be considered in order to, understand a particular customer profile. Now, what are the customer risk assessment best practices that we can adopt in our company so that we comply with the requirement? We are required to develop a customer risk assessment methodology which is specially designed for our own company. And it is also aligning with the enterprise-wide risk assessment. Now, CRA, that is customer risk assessment, is not something which is, one particular format will fit everybody. It's not that. That has to be customized as per your business sector, and also to what products you are offering, and what are the different kind of services you are offering. Every sector is different, every company will have different ideology, different products, so that is something to be evaluated, and a customized customer risk assessment methodology should be devised, which should be in line with the enterprise wide risk assessment. We are also required to mention that what KYC details we will seek for, then what is the like, what are the screening results, outcome of the screening results, in what cases what would be done. That is also something to be included in the methodology. When you are adopting a particular customer risk assessment methodology, and how are you going to conduct that for each of your customer, that could be completely as per, as per the company's, like, how company wants to do it. It could be, there are certain softwares also which are available which help you do customer risk assessment, but there are also some methods which you can devise by your own self for or your company, which could be in Excel based also. It could be all of these things written in the policy, and then you apply them. This is how you can do it. But the most important part is that we are documenting everything. What methodology we are following, how are we coming to low risk, how are we coming to medium risk, how are we reaching to high risk, that all has to be documented for each of the customer, and a standard methodology should be mentioned in our policy also. Then we are required to train the team. We are required to train our company staff as in how this customer risk assessment will be done, how, what are the factors which will be considered, how are we going to assign the risk factors, like how to use this Excel based documents or softwares, how to put them into practice. That training should also be done, and at the same time regularly monitoring our customers risk profile. That is very important. Like maybe 3 months, 6 months, 1 year, we have set a period for our customers that for low risk we are going to do it in this much month, for medium risk in this much years, whatever, but we have to mention that in our policy. And at the same time we have to change our risk assessment. We'll have to update basically our risk assessments for our customers as and when there is any update with respect to them.
Thank you, all of you, for joining us today. And hope we could provide some insights on managing your customer risk profiling. If you need more information, if you have any questions, you can reach out to us at info@amlua.com. Thank you once again.
Thank you so much.
Thank you. We are closing the session. Thank you.